Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And today, what I'd like to do is give you a brief update on what we're seeing within the corn and soybean markets based upon the latest USDA reports. Now, in this case, we've got updates that have been coming over the past couple of weeks. The first set came at the end of March with the prospective plantings report and the grain stocks report. Since then, USDA has updated the usage side of the market through their World Agricultural Supply and Demand Estimates report. So we'll be covering both of those today as we're looking here right now. So, looking at the markets, what USDA found was as they looked in the sort of the next 18 months for the corn market, what they saw for us on the usage side here as we're looking sort of at short-term supplies and demand, they did see that usage is remaining at a record level right now. As you look at this table here, look at the column for 2024 and that gray box down towards the bottom end is the usage side of the corn market right now. And what we're finding is we're at record usage right now, over 15 billion bushels of corn being utilized within the marketing year. And where they found that continuing to grow was in the export markets. As we're looking here, they now have us estimated at 2.55 billion bushels of corn being exported this marketing year. That's up 100 million bushels compared to where it was last month. And so we continue to see strong international demand as we look out there. Now, looking forward into 2025, the big storyline is corn acreage that farmers told us they were really going to increase corn plantings this spring. And as we're looking there right now, the estimated goal is 95.3 million acres of corn, which could lead to the biggest corn crop we've ever had. So the other big question we'll be watching here, and we won't get a really good estimate on this until we get to the middle of May, will be how does USDA see corn usage continuing to evolve over the next year? Now, as you look right now, I've got their estimates from what they released at the Agricultural Outlook Forum, which they did back in February. And you can see that they're still showing fairly strong usage for corn, but not quite as robust as what we're seeing today. And so the corn market is likely going to need to see some either increases in usage or possibly some cuts in supply here to help try to bring prices back up into balance. And so USDA kept their season average price estimates at $4.35 a bushel for the 2024 crop, and they're at $4.20 as we look at the 2025 crop. Now, in terms of that export pace, as we're looking right now, like I say, corn exports right now we're seeing the second best year we've ever had in terms of the number of bushels we're moving through the marketplace. As you can see, this is looking at year over year sales, and we're up nearly 25% or over 400 million bushels compared to what we sold at this time last year. And that growth is sort of across the board. We're seeing growth in Mexico, Canada, Colombia, South Korea, and on down the line. So the idea is it is fairly robust international demand that continues to pull on the corn market despite the challenges we're finding right now when it comes to trade policy. And so another thing we'll be watching over the next few weeks is do we see changes or breaks within that as we're looking forward? But at least up to this point, export sales have been a positive for us as we've moved here into 2025. Now, in terms of that acreage estimate we're seeing there, basically everybody across the country said they were going to plant more corn this coming year. You can see, especially as we look towards the south central and southeast U.S., mainly when we're thinking down there of cotton country, they are shifting fairly hard towards corn. But even across the Great Plains and the upper Midwest, we're seeing a fairly healthy move in the corn area. And a lot of that is based upon the fact that corn prices have held up relatively better than other crop pricing over the past year. And that is driving producers to try to protect the bottom line on the farm by planting the crop that looks like it has the better shot at getting back to break-even pricing. Now, in terms of soybeans, what we saw was something similar, if you will, to what we saw in corn, but it was much more muted. In this case, we did see USDA bump up supplies of soybeans just by about 5 million bushels, and that was through the through the import line. My apologies. But we also saw them increase crush demand here in the U.S. by 10 million bushels. So it was a slight increase relative for usage as opposed to supply. And that crush demand, normally we've been thinking about that growth being driven by biofuel demand, but in this case, it turned out to be it's export driven demand for both soybean meal and soybean oil. Now, in the case of what that meant for the 2024 crop, though, not a lot of movement there. So USDA maintained their season average price at $9.95 a bushel. And with those lower prices, especially of us pricing out of the double digits now in soybeans, USDA and farmers across the country have told us, nope, we're going to plant fewer soybeans this year. We're looking at 83.5 million acres being planted. And so we will see a reduction in terms of acres. That may mean a slight reduction in supplies right now, because if we put trendline yield with those acres, we could produce nearly the same size crop in 2025 as we did in 2024. And so again, the challenge will be, can we see usage grow to match that crop? And here's a case where USDA does offer some, let's call it some positive news right now, showing that we could see usage build and stocks fall in soybeans. But even within USDA's estimates, that does not necessarily lead to higher prices for soybeans as they look out there right now, with their season average price remaining at $10 a bushel for 2025. Now, as I mentioned, the change on the crush side was mainly being driven by what we're seeing within the export markets. In fact, as we look at soybean meal exports right now, they are running at a record pace. We are selling right now, we sold about 12 million metric tons, which is well beyond what we've ever done within the export markets here. And so, very strong demand for meal worldwide. But probably one of the biggest surprises is the surge that we've been seeing in soybean oil exports. In this case, the US used to be a fairly large soybean oil exporter, say back 5, 10 years ago. But as we have built up our renewable and biodiesel production facilities, we have seen more of that oil being absorbed into the domestic market through biofuels. But as we look here at the 2024 marketing year, and you can see that red line is just taken off. The idea is, compared to last year at this time, our export sales on soybean oil have gone up by nearly eightfold. And so we're seeing, again, very strong international demand right now across both corn and soybeans. And in this case, the demand on the soybean side is for the meal and oil products, along with an increase, a smaller increase when it comes to soybeans directly. Now, that increase in demand is helping, if you will, stabilize the market, but it's not necessarily causing farmers to think, well, I want to plant more soybeans in 2025. In fact, here's the map showing, as we're looking at soybean plantings across the country, that we see most states are backing away from soybeans this year, again, headed towards corn. The big exception there would be a state like Ohio, where we are looking to see possibly record soybean acreage being put in place here. But one of the big questions we'll watch on the acreage side will be as well, how quickly are we able to get into the fields as we look out there right now? If you look at the drought monitor and how that's been evolving over the past couple of weeks, what we have seen is the drought conditions lessen dramatically as we look east of the Mississippi River, and even, if you will, east of the Missouri River. But the idea is that there's still major drought as we look out towards the Great Plains and into the southern plains. And so, what that's likely going to mean here is that we are seeing a lot of moisture moving into the eastern corn belt. That's likely going to slow down planting progress as we look at places like southern Illinois, Indiana, Ohio, Kentucky, Tennessee. At the same time, too, here we should see planting jump off to a fairly good start as we look at North and South Dakota, Nebraska, even here in Iowa, we should get off to a fairly good start given the drier conditions. And typically, the better the start to the planting season, the more corn we see planted in that area. The slower the start, usually the less corn we see planted in that area just due to the timing as we look there. So that will be something that we can monitor as we go over the next few weeks, and USDA publishes those progress reports on planting. Now, when you add this all together, what we have seen are very volatile markets over the past couple of weeks. But here, as we enter the Easter season, we have seen a recovery of sorts. If you will, the tariffs were announced, the markets were all down. Those tariffs have now been paused. The markets have recovered some from that. And so if we look at current futures, where they basically stand is they point to a 2024 season average price in the 440 range, which is just slightly higher than USDA's estimates. But where the big mover is on the 2025 crop side. Corn futures have maintained a fairly healthy, if you will, margin above what USDA is saying. USDA's got an estimate of 420, and here the market is at 460. And I think a lot of that strength is still coming from what we're seeing in terms of corn usage right now. We're seeing very healthy feed demand despite a shrinking cattle herd. We're seeing basically near record to record ethanol usage of corn. And when you have the building, growing export line there, that combination is providing some needed support for the corn market as we look there. Now, I do get asked a lot whether that could also be, drought related as we're looking there. And I would figure it could be, but I don't think it is, because if it were drought related, we should see a similar type bump when we look at soybeans, yet we don't see that. As we're looking here, I would say the soybean futures market is pretty well in line with what USDA has estimated right now, because USDA is estimating around $10 soybean prices, and that's exactly where the market is as we look out there. And so in this case, what we've got is corn offering some prices that are, if you will, at or above break even levels as we estimate here for Iowa. And so that's driving producers to want to plant more corn. At the same time, too, soybean prices are still well below our production cost estimates, and therefore farmers are backing off that acreage as we look into 2025. So that's a very quick update on what we're seeing within the markets. Again, as we're looking forward over the next few weeks, one of the biggest things I'll be watching are two big weekly reports that we get coming out. In this case, on Mondays, we'll get the crop progress reports, where USDA will start providing us a snapshot on how planting is going throughout April into early May. Along with that, every Thursday, we get the export sales report, and I'll be watching that very closely as well. That comes out on Thursdays to basically see, do we see, let's call it, a longer term hangover from the tariff announcements and the pause, to see, do we see changes in those export sales since, if you will, the announcement and the pause have both taken place. Well, with that, that's a quick update on what we're seeing in the markets. Again, my name is Chad Hart, Extension Economist at Iowa State University. Thank you for your time.